We're celebrating the end of tax day with a big bank on the rise and a precious metal in free fall. Investor Beat starts now. Thanks for watching. I'm Chris Hill. A bad start to the week as GDP growth in China was lower than the previous quarter. A rough day for commodities meant a rough day for Dow components like Chevron and Caterpillar. Joining me in studio today, Jason Moser and Matt Argesinger. Shares of Sprint hit their highest point in more than 4 years after Dish Network made an unsolicited bid to buy Sprint for $25.5 billion. The cash and stock deal is worth 13% more than the deal offered by Japanese telecom SoftBank. Matty, they are swinging for the fences on this one. Are they in over their heads when you see a $17 billion company making a $25.5 billion bid?
It's a really big deal, but it's one I think Dish almost has to make. The basic pay for TV service model is going away. We know that customers want to access the entertainment when they want, where they want. I think Dish gets this by buying Sprint. They sort of add a cellular service to their broadband and TV offerings, and it's one subscription. It's a powerful consumer model, and more importantly, they're buying wireless spectrum, which is Sprint has a lot of. Dish has been buying up a lot of it lately. That allows them to give even more data across a faster, more wider network. It works for them.
It's not a done deal, but this seems like one of those situations where if it goes through, consumers are going to be one of the big winners.
I think so, and to Matty's point there about Spectrum, I mean, we also have to tack in the potential here with Clearwire, as that would really give this combined entity a significant spectrum advantage over the likes of Verizon and AT&T, which do a great job of bringing that stuff into the home. They also offer it outside of the home, but really what this merger and what this deal is trying to do is to make it the best of both worlds, give you everything inside of your home and outside of your home, and I think consumers definitely benefit from that. It's just a matter of whether they can really pull it off or not.
Obviously a big run-up for Sprint today, but when you look at Sprint, but let's start with Dish Network and that stock, getting knocked down a little bit. What do you think of the shares? Is now the time to jump in?
I don't know if this is the time to, we could get into a bidding war here, and Dish might have to pay a higher price, so I wouldn't be surprised if the stock for Dish goes down a little bit. Sprint, I don't know. I'm kind of convinced that Sprint might have a bottom because there probably is going to be a bidding war for those assets. So, if you're speculative, you might want to take a bet on Sprint. I personally wouldn't jump into the deal right here.
All right, let's get to some of the day's movers and shakers. The price of gold hit a new 2-year low, and the largest gold ETF has now fallen more than 10% in the last 2 days. Time to buy? Is this a value opportunity here?
I don't know, Chris. It's a lot of things hitting gold right now. You got Cyprus, which I guess has to sell their gold reserves because they have to pay for the bailout. Dollar keeps getting stronger. There's rumors that John Paulson, who owns a significant amount of gold, might have to start selling. Look, gold doesn't have any intrinsic value. It's got only perceived value, and that perception is really bad right now, and I think it's only going to get worse. I would stay away from gold.
Citigroup's first quarter profit up 30%, better than analysts were expecting, and unlike some of its competitors, margins have remained stable. The stock's up 25% in the last 6 months. Are you at all interested?
No, because you just referred to 6 months, and for me, that is not really indicative of a healthy, well-performing business. And let's pay attention to the revenue really here with Citigroup. That top-line revenue, which has not done so well over the past year, but if you look at over the last 5 years, their top-line revenue has almost been cut in half, and during that time, the share count is up almost by a factor of 6, which has just killed shareholders along the way. I continue to believe that if you need exposure to big banks, go ahead and just get it through a well-run insurer like Markel or Berkshire Hathaway.
Shares of Netflix rising after one analyst initiated coverage with a buy rating and set a price target of $250. Is that reasonable? This stock is up more than 80% year to date. This guy's talking about another 40% rise over the next 12 months.
Look, it's a bit of a bold call. Unfortunately, I can't argue with it. I do own shares of Netflix, and it's a recommendation in a service that I work on. Look, this is the idea that maybe Netflix, as cable companies evolve, Netflix evolves and cable companies learn to know that Netflix is valuable from a broadband sense. So cable companies would actually benefit from having Netflix demand more of their broadband. It's kind of a stretch a little bit right now, but I see the value, I see the potential. Netflix could actually hit 250.
And finally, the price of oil also falling today, which meant bad things for oil-related stocks. Deepwater services company Oceaneering International was one of the victims of that ripple effect. Long-term, Jason, this is a winner. Is this one of those buying opportunities now that it's been knocked down a little bit?
Yeah, thanks a lot, gold, for taking everybody down with you. No, I think Matty's exactly right. Sell the gold. Oil is just one of those things that's kind of going down here with the ship. But when you look at this company over the long haul, the specialized services they provide in deep water, those subsea subsea vehicles, the umbilicals. It's just a very specialized nature of what they do. It's a smaller company, so yeah, it's going to get hit a little bit harder on volatile days like today. I do believe that today looks like it could be a good buying opportunity, though.
All right, that is going to do it for Monday's action. Let's look ahead to the rest of the week. Matt, what's a stock you've got on your radar?
Looking at Intel, this one's just been beaten to heck, but I'm watching the margins. If they can stabilize or even go higher, I'm also looking at what they say about their tablet business, if they can have some solutions there long term. I own a small position in Intel. I might look to add if there's some good news tomorrow.
All right, Jason, what about you?
Yeah, talk about a company that's really on the up and up here. Yahoo announces earnings tomorrow after the market closes, and I do like a lot of what Marissa Mayer's been doing with this company. They make most of their money from the paid search and the placement ads all over the web there, and so what she's doing is really figuring out a way to monetize that better, along with taking them into mobile. And the key for me here, really, I'm looking for two important things with Yahoo. Number one is organic revenue growth. I want to see that the company is making money based on what they're doing, not just acquisitions. And then secondly, I just want to get some more clarity into their mobile strategy and how they're going to move forward with that. It's a stock I've been keeping my eye on, and certainly tomorrow's earnings will keep me interested.
All right, for Jason Moser and Matt Argesinger, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.